Most of you think that making your on-time mortgage payment is financial responsibility. Here's the truth. You're just a slave to the bank for 30 years. I had a client who had 26 years left on their mortgage, but with our strategy, we're paying off their home in 3.1 years, and I'm getting their effective interest rate on their mortgage down to 0.7%. And all we're doing is using one strategy called the first lien HELOC. This is a strategy that most real estate agents, most lenders, most banks are not going to tell you about. This is something that my team and I specialize in, and we help our clients pay off their homes in years instead of decades. This doesn't require any extra payments, anything that you typically hear online about how to pay a home off faster. My name's Sean Uehara. I've been a mortgage lender for almost 20 years, and I love to teach you how to take some power back from the banks because they are making so much money off of us when it comes to interest. And when we can turn it around on them and pay off mortgages of any size, typically within a 3 to 7 year window, I'm all for it. And I want to teach you how to do it. So make sure to save this video because you're going to have more questions. It's going to sound too good to be true. I want you to watch it over again. And if you want to learn how to do this yourself, I can show you how to do it and how fast we can pay off your mortgage. All right, here's this guy's setup. He owes $245,000 on his $350,000 home. He's got a 30-year fixed mortgage. He's been in his rate now for 4 years at 4%. Take-home pay every month is $21,000. He's got $60,000 sitting in his checking account. And I already know all you haters are going to say, well, he makes $21,000 a month. He should pay his house off. Listen to the concept of how this is happening because it doesn't matter how much money they're making. It's to understand the concept because it may apply to you if this strategy could potentially work. So as we treat the HELOC like our checking account, we got $21,000 going in. That automatically reduces our principal balance by $21,000. After all his bills and expenses are covered, we've got $4,600 left over. I know the HELOC might sound so crazy to think about, but all we're doing is we're treating the HELOC like our checking account. Whenever you get paid, the money goes into the line of credit. It pays the balance down dollar for dollar. We have a 30-year draw on this HELOC, so you have access to your cash at all times. If anything, we're creating more liquidity for yourself over time. Here's his current mortgage, 26 years to pay it off. We're going to take that same balance, $245,000, refinancing him into our HELOC, paying it off in 3.1 years, saving him $119,000 in interest. Interest rate on the HELOC we're using to average this out is 9.2%, and I'm taking the max rate on this one just to show you guys an example. He's paying $29,000 in interest in 3.1 years. That gives us an effective rate of, like I said, 0.781%. Now that's real financial responsibility, paying off your home within a few years and saving 6 figures in interest. Stop thinking about mortgages the way that they brainwashed us to think about it the last 50 years. Think outside the box and know that there is a better way to home ownership.